Good day, class. Today we are going to discuss audit of cash. In applied auditing, we have first to review financial accounting. Why? Because financial accounting and auditing basically comes from the same concept: the measurement, presentation, and disclosure of the items in the financial statements following the PAS and PFRS. The focus of financial accounting is on the preparation of the financial statements. In contrast, auditing or in applied auditing, the FS is already prepared, and you as the auditor will verify its compliance with the prescribed criteria. Therefore, you also have to know what is supposed to be done. In financial accounting, it's more on knowing the correct amount. In applied auditing, it's more of the adjustment. But the adjustment starts with knowing what is the correct amount. Of course, you have learned since your basic accounting that you have to compare what has been done and what should be done in order to know the adjusting entry. Applied auditing, therefore, start with the review of financial accounting. When you already know the correct valuation and treatment of an item, the rest will just be an application of the rules of debit and credit. For example, if an item that was recorded as cash is not supposed to be cash, but instead it should be part of accounts receivable, the adjusting entry is to increase accounts receivable, the correct classification, so debit accounts receivable, and decrease cash, the one that was recorded, so credit cash. Now let's start with the review of cash and cash equivalent. Pass 1 indicates that cash and cash equivalents is the minimum line item that should be presented in the statement of financial position. Okay, so it includes cash on hand, which may be undeposited collections, bank drafts, cashiers or managers' checks, customers' checks, and travelers' checks. Valuation of cash is simply based on its face. So problems to compute cash usually involves identification only, such as this problem. So let us identify which of the items here are part of cash. So undeposited cash collections, what do you think? First, yes. The next one, customers check dated 10/31/2020 amounting to 5,000. Assuming, of course, the balance sheet date is, let's say, 12/31/2020. So assuming the date today is 12/31/2020, or even if it's not the date today, maybe you're trying to compute after the balance sheet date, but you're trying to identify what is to be presented as of 12/31/2020. So this is it. What is this? This is a dated check. This is a 2-month-old check. This is to be added. Next is customer check dated 1/1/2021. Is this part of check? Is this part of cash? The answer is no. This is what we call a post-dated check. The next item is customer's check dated 1/1/2019. Is this part of check? Is this part of cash? The answer is no. Even though the date uh, is already passed, uh, a check should not be a check that is more than 6 months old is what we call a stale check. So this should not be included. What do you do with this? You should revert it. If it's included under cash, you have to revert it to accounts receivable because it's issued by a customer in payment of a receivable. Then the next item is NSF Check received from customer dated October 1, 2020. This is also a dated check. It's 3 months old, but it's NSF or no sufficient fund. So this is not a part of cash. So checks issued by the customer which are in your possession forms part of cash on hand unless they are post-dated, they are stale, or they are NSF. Another name for NSF is the if or the of drawn against and the if drawn against insufficient fund. Okay, so the amount of cash on hand in this problem is 1,005,000. Cash and cash equivalents also includes cash fund unless it is restricted from being exchanged or used to settle a liability for at least 12 months after the end of the reporting period. Thus, funds for current operations such as dividend fund, payroll fund, petty cash fund, and value-added tax fund are part of cash and cash equivalents. Those cash funds restricted for non-current operations like bond sinking fund, plant expansion fund, or fund for post-retirement benefits of employees are not part of cash. However, if a cash fund is originally for a long-term liability, when the liability becomes current, the fund or the cash fund also becomes current and forms part of the cash and cash equivalents. Okay, so in this problem, identification ulit, payroll fund, is this part of cash and cash equivalents? Answer, yes. Payroll is a current operation. It's part of current operation. Plant expansion fund to be disbursed 2022. Is this part of cash and cash equivalents? No, that's a non-current purpose. Planned expansion fund to be disbursed 2021. Answer? No. Kahit next year pa yan, hindi magiging current yan. Planned expansion. It's for a non-current purpose still. Bond sinking fund. The bond is to be payable August 2022. Is this part of cash? Answer? No. It is payable in the long term. The bond is long term. The related liability is long term. The cash fund is also non-current. It is not part of cash and cash equivalents. Bond sinking fund to be paid March 2021. Now, this time, it's part of cash and cash equivalent. If the liability becomes current, it becomes non-restricted to settle a liability for the next 12 months, it is part of cash. So the answer in this problem is 600. Cash and cash equivalents also includes cash in bank. Okay, the examples of cash in bank includes demand deposit or checking account or current account, savings deposit, and time deposit. Okay, so in this problem, we have PCI bank checking account 1,000. This would be part of cash. The next item is a negative 100 in the PCI bank. This is what we call bank overdraft. The treatment for bank overdraft, if it has if the company has another account in the same bank, then that would be removed or deducted from or offset from the other bank account. The next item is PNB account with a negative 100 as well. This is also a bank overdraft, but there is no other PNB account, and therefore this would not be offset against any item, and therefore this is a liability to PNB, and therefore this should be ignored in the computation of cash. Okay, so it's ignored in the computation of cash, but of course, when it comes to problems which mentions that this item was incorrectly deducted from your cash, then you have to place it back. And the entry would be a debit to cash, since you're bringing back the negative amount which you previously deducted from cash, and then credit bank overdraft, which is a part of current liability. The next item is a check drawn from PCI Bank checking account payable to a supplier recorded on December 31, 2020. Okay, so it was already recorded. So merong ginawa dito, ni-record na. Tama ba? Delivered on January 1, 2021. So mali kasi this is what we call undelivered check. It was recorded but it's not supposed to be recorded yet kasi nga undelivered. So anong gagawin? By recording, your entry was a debit to accounts payable, credit cash. Ibig sabihin, binawas mo na dun sa accounts payable, binawas mo pa dun sa cash. Therefore, dahil mali, dapat ibalik mo. So, the entry would be, the adjustment would be a debit to cash and a credit to accounts payable, bringing back your cash and bringing back the liability as well. Okay? So, in the computation of cash, what do? You add this back. In the next item, this is also another transaction pertaining to your PCI Bank. So you have check drawn from PCI Bank, checking account payable to supplier, recorded and delivered on December 31, 2020. So the record na deliver, tama na ba? Na-deliver na eh. Hindi, merong dugtong. Sabi dito, dated January 1, 2021. So, ano nang tawag dito? This is post-dated check. So, binigay mo na sa supplier as of December 31, pero hindi pa siya dated. So, hindi pa dated, hindi pa pwedeng i-encash. Not yet a cash on their part. Now, this was drawn against your bank account. Ibig sabihin, the entry that was made when this transaction was recorded was a debit to accounts payable and a credit to cash. Okay. Pero dapat ba? As I have said, hindi nga kasi post-dated. So, nung gagawin, reverse. The entry would be a debit to cash and a credit to accounts payable. So, bringing back the cash, bringing back the accounts payable. Therefore, in computation, you have to add this. Okay? Therefore, computing the amount of cash, the answer would be 990. Okay, also a part of cash and cash equivalents is cash equivalents. So what are these? These are short-term and highly liquid investments that are readily convertible into cash and so near their maturity that they present insignificant risk of changes in value because of changes in interest rates. The only thing that you have to remember regarding cash equivalents is that to qualify under cash and cash equivalents, these cash equivalents should be purchased within 3 months prior to maturity. Okay, the first item, money market instrument acquired November 1, 2020, due on March 1, 2021, amounting to 120,000. Is this part of cash and cash equivalents? So the rule is acquired within 3 months. Okay, so December, January, February, that's how many months? 4 months. So is this part of cash and cash equivalents? Answer, no. Okay, even if the balance sheet days is 12/31, 2020, that's 2 months to go before it matures, it doesn't matter. The, the rule is counted from the date of acquisition, okay? 3 months before maturity. The second item is a treasury bill acquired December 31, 2020, due on March 31, 2021. Is this part of cash and cash equivalents? The answer, yes, that's exactly 3 months. Redeemable preference shares acquired December 31, 2020, due on March 31, 2021. That's also 3 months. Redeemable preference shares may qualify as cash equivalents. Answer, yes. Equity securities expected to be sold on January 31, 2021 does not qualify as cash equivalents because it does not have a maturity date. Okay? So the answer in this case would be 70,000 if you are asked to compute for cash equivalents. Okay, so in this problem, we have the first item, cash in bank, PCI bank, checking account number 1, 200 legally restricted as compensating balance. Okay, so what's the rule regarding compensating balance? If it's legally restricted, deduct. Generally, the amount deducted would form part of long-term investment. So 800 will be part of cash. Cash in bank, PCI bank, checking account number 2. This time, the 200 is not legally restricted, it is informally restricted. So we just ignore the 200. The amount to be considered is 1,000. Cash in close banks would be restricted, of course, and that would be part of other non-current assets. And cash in foreign banks restricted. This is also part of other non-current assets. And the ABC Bank Savings Deposit Contingent Fund, this is a long-term investment. And also preference share redemption fund, this is long-term investment. This is for non-current purpose. Okay, so let's have here a problem on petty cash fund. As of December 31, 2020, the company indicated a petty cash impressed balance of 10,000. The petty cash box, however, revealed the following. So originally, the impressed balance is 10,000. You should identify which of the items that are present in the petty cash box are still or should still be part of the petty cash. Okay, so and that will be your basis for the adjustment. Currency and coins, of course, this is a part of petty cash fund. The employee vales, ano yan, these are IOUs. These are advances given to employees. So this is a thing that has to be adjusted and placed into the account advances to employees. This will not form part of the petty cash fund, the ending balance of the petty cash fund. Currency in an envelope marked collections for charity with names attached. These are contributions given by employees. So the role of the petty cash custodian is only um, a, a personal custodian of this item. Kumbaga, this item does not concern the company. It is a personal custodianship that is given to the petty cash custodian. Kumbaga, pinahawak lang sa kanya. This does not have to be recorded by the company. So, and of course, this will not form part of the petty cash balance. Unreplenished petty cash vouchers would of course be adjusted to the expenses. So, ito yung mga nagamit na. These are the indications or proofs of the use of the petty cash fund. So it should be
adjusted to expenses. Okay, so it will not form part of the petty cash fund. And then finally, check drawn by the company payable to the petty cashier. This is a replenishment check, and therefore it will form part of the petty cash fund. So there are two items here that are supposed to be still part of the petty cash fund balance, and that is 2,300 and 4,500 for a total of 6,800. Okay, so making the adjusting entry for this, you have to reduce the trial balance of 10,000 to its correct balance of 6,800. And therefore, that should be a reduction by 3,200. Okay, so credit petty cash fund, 3,200. And then you have to place the items, or you have to uh, adjust those items na pinasukan or pinaggamitan ng petty cash fund. Okay, so yung petty cash fund na gamit for employee vales. So the account title here is advances to officers and employees. So debit advances to officers and employees 1,100. Also, the unreplenished petty cash vouchers are indications of the use of the petty cash fund, and the entry for this would be a debit to expenses for the amount of 1,300. Aside from this, wala nang accountable items that has na pinaggamitan ng petty cash fund. Okay? So yung currency in an envelope, so hindi sa petty cash yan. Kumbaga inilagay lang dyan as parang to protect, temporarily protect the amount that will be eventually used. Okay? So kukunin din pero yung yung company hindi na niya i-record yan. Okay? And so, as you can see in here, there will be a discrepancy between the debit and the credit. So the total debit is 2,400, whereas the reduction to the petty cash fund is 3,200. Therefore, you should account for a shortage, a debit discrepancy of 800, which is to be debited as cash short or over. If you can recall, this cash short or over will be adjusted to either receivable from petty cash custodian or loss, depending on the result of the investigation.
Okay, so that's it for the review on cash and cash equivalents. So next thing, first, we will have a problem to solve. You submit your answers. No correct yo, point yo. Ngayon, syempre, no correct yo aminin, awan madiscussen. So, ngayon no wrong yo, then we have to explain and discuss. So your choice, please answer without any assistance from whosoever. Okay? So thank you very much for listening.